the world seems flooded with companies that are trying to help you find the perfect place to stay. Think Airbnb or Flipkey. What do we do with a veteran vacation lodging play like HomeAway, the web-based company that's still the world's largest marketplace for vacation rentals? I've been a big fan of HomeAway's website for years, but the stock has been stuck in a rut for more than a year and just can't seem to rally without giving back its gains. Maybe that's about to change because earlier this month, the company reported a strong quarter, sending its stock soaring 9% higher the next day. While HomeAway's earnings were just in line, the company's revenues came in higher than expected. That's what I like to see about growth companies. 13.9% increase in paid listings, 53% increase in pay per booking listings, where the advertiser pays nothing up front but gives HomeAway a cut when someone rents their property. Plus, back in June, the company announced a partnership with Kayak, the popular Priceline subsidiary that could bring in a lot more business, as HomeAway's vacation rental properties will now be listed on Kayak's site. So can HomeAway pull away from the competition and see its stock put up a sustained rally? Let's check in with Brian Sharples. He's the co-founder, chairman, and CEO of HomeAway. Hear more about where his company is headed. Mr. Sharples, welcome back to Mad Money.
Hey, Jim. Nice to be here. Thanks.
All right, Brian, tell me where you think we are for HomeAway in the consciousness of Americans when they're trying to think about vacation and where to stay versus where we were 5 years ago.
Well, I mean, I think vacation rentals have risen substantially in the consciousness of Americans. And, you know, HomeAway's led a lot of that. I mean, families are looking for great values. There are millions of houses all over the United States available for rent. But still, you know, what the data says is that when a family goes to go on vacation, maybe about 40% of them today consider a vacation rental. That's up probably from 25% 5 to 6 years ago. So it's moving, but there's still a tremendous opportunity for growth in the business.
Well, I like a lot of what you're doing. I'm going to, most recently, I'm going to label it concierge. You get a tie-in with Uber. You get a tie-in with a potential Care.com babysitter with which my daughter actually is part of that network. And what I'm hearing is that you're making it so that it is just like checking into a hotel if you use all our services on our mobile app.
Well, we're working hard to do that. When you check into a hotel, you do typically have a concierge, so you can run downstairs and get that information. But we live in a mobile world now, and one of the things we've been working very hard on at HomeAway is a mobile app that you download before you go stay in the property. And houses are complicated. They have TVs and stereos that people have to learn to use. There are door lock codes. There are swimming pool things to turn on and off. And so we have a new app that does all that and also provides all these great services like grocery shopping through Intercart, or you want to grab a car, you can do that through Uber, as you mentioned, or getting a babysitter, or even getting a chef are all things people want to do. And so in this digital age, we can tie all those together. And we've been doing it, and customers are responding to that in very positive ways.
All right, I love the fact that the free cash flow, which I know you tell me is the metric that I should be looking, is really exploding. Yes. But am I to be concerned that the direct marketing budget is up so much and that you prove the return on investment here?
Yeah, I mean, I think that was a conscious decision. You may remember last year we announced that we were going to increase marketing 50, 60%, and we were going to do it this year without sinking our margins, and we did that by leveraging other parts of our business. As we grow as a company, we don't have to grow G&A and product and other areas of our company, and so we moved that into marketing because there is a big opportunity to create awareness among consumers. So I think coming out of this quarter, we proved that we could spend a lot more on marketing. We spent almost 60% more than last year, but still delivered a great quarter in terms of EBITDA.
All right, now we talk a lot about unicorns on CNBC, and I thought it was very interesting. You got asked a direct question on the conference call about Airbnb, and you said, look, they certainly had a busy quarter. They launched a new campaign, which they like quite a bit, but at the same time, you have a new campaign, and I think to some degree it is saying, look out, we're not Airbnb.
Well, that's exactly right. If you look at our campaign, it's all about families going to vacation destinations. That's what we do. If you look at their campaign, it's about a singular traveler going to a city. That's what they do. And I think there's a lot of misinformation out in the marketplace where people think we're the same company when, in fact, Airbnb maybe has about 10% of our properties. So about 90% of everything in our million-plus home network is unique to HomeAway and actually quite different. And so the marketing's been a good way to make people aware of that.
Well, do you think that one day there'll be kind of a comeuppance with this venture capital world? I mean, I looked at Zulily. It came public, went up really big, and ended up being sold for less than it came public. And certainly, I think that probably some people were saying, well, wait a second, what is the private market value for some of these? Do you think the private market value of some of these companies that we see is just kind of I'm not calling it fictional, but let's just say inflated?
Oh, I think it's massively inflated for some of these companies, and I actually do believe we're in a private market bubble, especially for these, would-be unicorns. I think there's a handful of companies that investors are just scrambling to put money into, and the prices you see have a lot more to do with competition to get capital into the big deal or the hot deal than it does any sensible evaluation against cash flow or EBITDA or earnings potential. And so, yeah, I think there's a bubble there, and I think we're going to see that burst at some point. I don't know when.
Well, one thing I would tell you is that I feel like the recognition of your company dramatically, I get it anecdotally. I talk to people all the time who are now using you, especially if they want to do 2 and 3 families instead of 1 family, because the cost of a hotel is so prohibitive. Do you find that group gathering is a terrific way that you're seeing a surge in business from?
We're seeing a big change in that. Jim, I started the company about 11 years ago, and we're starting to see the numbers of people who travel together going up and up. We live in this world of a modern family where, there's a lot of intergenerational travel, a lot of multiple families getting together, not just because it saves money, but because it's fun. Like, my kids love to travel with other kids, and so HomeAway affords people the opportunity to do that. It's a lot different than getting a bank of hotel rooms somewhere. And so that is becoming a big part of this industry. And in fact, if you look at our advertising, it's very much geared towards that and trying to encourage that kind of travel.
Well, I thought that's why I wanted to bring it up. I think that this was the breakout quarter for you. Brian Sharples, the co-founder, chairman, and CEO of HomeAway. Congratulations, sir. It's looking up for you guys. Appreciate it.
Thank you, Jim.
Guys, the private market valuations are insane. The public market valuations are too cheap, like HomeAway. After the break, I'll try to make you more money. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.